Thanks again, everyone, for tuning in to our latest podcast. And today we're talking about life insurance. So this is probably not a topic that jumps out and is one of the most popular topics to discuss. But however, we feel it's very essential. And today I'm delighted to invite along to our podcast Michael Smethurst, who has been in the industry since 2009, working overseas in Asia, basically in Vietnam and Cambodia. And he is the Atlas Life director and person in charge of their sales and distribution. And he's been working with them for the last 7 years, based out of Vietnam. So, Michael, welcome to our podcast, and I hope this podcast finds you well today.
Thanks, James. Pleasure to be here. Thanks for the invite. Hello, everybody. First podcast, so you'll have to bear with me.
No worries. So, I mean, you and I think as we were discussing, we've known each other since before COVID, when we met in Ho Chi Minh, or Saigon as it is to many as well. And today, let's sort of chat about life insurance. And obviously, we can talk a little bit about your company as well later. But as you and I are aware, life insurance is one of the oldest forms of financial products out there. Yet it's still probably fairly misunderstood and underused. So can you tell me the reasons why this might be?
Sure. I think there's several different reasons, but I always think that life insurance is a product that is actually sold and not bought. And what I mean by that is that a majority of policyholders, they're not waking up on a Saturday morning and saying to themselves, okay, I'm going to take the kids to the football training in the morning. I then need to go and buy some food and cook that food in the afternoon. And then if I've got time in the evening, I'm going to try and find and source some relevant life insurance. I think that for the clients that do forcibly go out and purchase life insurance, I think generally speaking, there's a trigger point behind it. So it would be something like a family member is having a really bad time of things due to, maybe an illness, or maybe a death, or, a friend or colleague is going through the same issues. So as I say, I think that a majority of the time, you don't necessarily think you need it. However, for the clients that the likes of yourselves are working with, James, I think, again, a lot of the time, and I'm not having a go at the IFA market here, but regulation in more sophisticated countries like the UK, for example, before you actually engage somebody into financial advice, you have to make sure that there is relevant protection in place. That obviously it's not the case in the overseas markets or in the offshore market. So I think that, at times IFAs or regulated IFAs can overlook this because some of the other facets of financial planning are a little bit more lucrative, let's face it. So I think a combination of those two things, but finally, I also think that people still think they're invincible, James. We've spent long enough time in our professions to understand that that's not the case. I think, a quote from John Lennon is, life is what happens when you're busy making other plans. And we see it all too often that clients, generally speaking, think, oh, it's not going to happen to me. Variably, in some occasions, you are that person that we're having a conversation about. So I think a combination of those three things is a major reason why a lot of clients are underinsured, especially in the overseas markets.
Yeah, I think you raised some very good points there, actually, Michael, and I would agree with you that a lot of the sort of like newer, more modern financial advisors, you sometimes think if it's an ego thing for them, they just want to sell investments because it's whether it generates more money, they think it's the cool thing to do, and sort of life insurance is sort of old-fashioned and a bit dull for them. But I think, as you've highlighted, that means that really that duty of care that they have to their customer is probably neglected because, I think, as you and I agree, probably it's one of the foundings or building stones or building blocks of good financial planning. But let's also talk a little bit about the history of life insurance and the different types of products and why it's so important. So perhaps if you can delve into that a bit as well, that would be great.
Of course. I mean, I actually had a look at this a few weeks back, and I was quite surprised to learn that you can actually trace the earliest forms of life insurance back to the Roman Empire, where soldiers going into battle would actually put a small coin into a pot, hence insurance pot or other type of pot. And if for the comrades that didn't make it back, they would have a ritualistic burial, which obviously cost money in those days. You know, nothing comes free in life, unfortunately. So if you fast forward now to 2024, of course, the life insurance industry has evolved massively since then. And I think, James, you probably agree that over the last probably 10, 15 years, the life insurance market has evolved just as, just as highly. So now you look at different products or policies that are available to you. You have term life insurance that's available, which is probably the most well-known and the most sold life insurance policies around the world. You have unit-linked policies where you've got an investment arm and you've got a life insurance policy sat next to each other. You then have hybrids, which generally, typically speaking, would be used by high net worth individuals. So you have products like universal life policies, PPLI policies. But I think the main focus really or the go-to product for a majority of IFAs would be your term life, your standard term life policy. Reason behind that is cost efficient. So for those of you that aren't fully aware what a term life policy is, what you're doing essentially is you're saying, okay, for a certain set period of time, let's just say 20 years, I'm going to cover myself or protect myself to the tune of $1 million. So if anything happens to me during that 20-year period, my beneficiaries are going to receive $1 million. So generally speaking, as I've said, it's cheaper and it's an incredibly flexible product. So it might not be the sexiest product available in the market, but it will fulfill pretty much whatever you want it to do. So we can write individual policies. We can write joint life first death, which typically would be a husband, wife, civil partnership, and whoever dies first, the second one gets the payout. We could do a joint life second death on the same scenario. However, the payment would come on the second death. For businesses, we can offer shareholder protection and key man cover. We can also offer group schemes. We can offer decreasing term policies for mortgage protection. We also help out with IHT planning with simple, straightforward life insurance policies. So, as I said, term life insurance for a majority of individuals might look quite boring. However, let's face it, the one thing that I've got in common with you, James, and we've got in common with anybody watching this is at some point, we're all going to die. So if we had term life policies in place, we can actually, some providers now will actually go and take a term, instead of saying to 20, 25 years, they can actually cover you up to the age of 99. So, as I say, life insurance policies, life insurance products out there, there's so many to work your way through. And that's why you should be sitting down with a advisor like James who can navigate the products for you, dependent on your current position, give you advice on what the best policy for you is based on your situation. Because as you know, James, it's not a one size fits all scenario with life insurance.
No, I think there's some great points there, Michael. And as you say, you kind of like refresh my memory as to, all the different needs or solutions that term life provides, whether it be, protecting your family, providing a sum for inheritance tax, if that's an issue for you. And then also other sort of more niche requirements like business and key man as well. I mean, really, there is a lot that you can do with the term insurance. And I think for most of those who are out there listening, probably it's not always obvious what those benefits are that you get from these type of policies. So I think that's why, chatting with someone who's knowledgeable about these kind of products is going to be really relevant, and especially for international employees or expats. But just sort of expanding a bit further in terms of what we're talking about. So with regard to international employees, is it fair to say that many focus first on investing and forget about insurance, as it were. And what are the consequences that you've found, during the time that you've been working abroad for those that, that forget about sort of insurance, as it were?
Of course, yeah. I would say I would agree 100% with, or say yes 100% to that question, that a majority of international workers would probably focus on other aspects of financial planning when they, first step down into an assignment. So I think medical cover is typically would be provided for as a benefit for an individual that's moved to a new location. However, I think that if they were to sit down with an advisor's probably going to make them aware of their, potential to be investing in a tax-free environment. Maybe there's a little bit more money left over in the kitty each month. So I think that having a conversation about how you can grow your money by 5, 10, 15% is probably an easier conversation than speaking about your impending death. So I think that the major issues that some clients are going to face with this is, well, let's just take a scenario, James. Let's say you've sat down with an individual. You've come to the conclusion that they require $1 million of cover. If they were to turn around to you and say, look, I agree, I need this policy, however, I'm going to wait 5 years. Well, first things first, your policy is going to be more expensive in 5 years' time. Every single life insurance policy, regardless whether it's term or any of the other products that I spoke to you about before, the younger you are and the fitter and healthier you are, the cheaper the policy is going to be. So if you take it out at the age of 40 instead of 45, you're going to be paying the rate of a 40-year-old's rate for the rest of the duration of the policy. So first and foremost, the cost of delay hits your pocket. Secondly, and only earlier today, this actually was a conversation that I had with an individual, you might get into a situation where you're actually becoming uninsurable. So you might, 5 years is a long time. And if you were to pick up a severe illness, it could render you uninsurable to the point where, nobody wants to touch an individual. It could mean that while a life insurance company like ourselves would actually take you on risk, they would take you on risk at a premium. So your loading might be 50%, it might be 100%, it might be 200%. So I think the cost of delay is twofold. And as I say, I had a conversation with an actual broker earlier today, not an individual, an actual broker who said, Mike, the reason I've not been speaking to you for quite a while is my wife's suffering with an aggressive form of cancer. She's got the all clear. What are the thoughts on potentially taking a life insurance policy out with you now for her? Well, it's going to be tricky. It's going to be very difficult. Wouldn't generally say a flat no. However, it's going to be much, much more costly if we are able to accept that individual on risk. So as I say, the cost of delay is twofold. You could be uninsurable, but it's certainly going to be more expensive regardless.
Yeah. No, I think this is these are points that are well worth highlighting, and I think it's probably fair to say that, I mean, obviously, I started my expat journey quite a lot earlier than you did in the 80s in the Middle East, and in those days, generally, if people went and worked out in the UAE or Singapore or Hong Kong, which were the main markets then, generally they would go out on a contract, and these kind of benefits would be provided for them, like life insurance and medical insurance. But I'm sure that in your conversations that you have now with brokers and clients, because of the competitive nature of the business environment that we work in, many of those companies now have cut back on those benefits. Yeah. And really, it's up to the individuals to look after themselves when they move abroad. And it's in
also,
some ways
on that point though, James, it's also worth noting that onshore policies from, let's just again take UK as an example. A UK onshore policy isn't going to necessarily cover somebody overseas anymore. Well, it wouldn't in the first place. But as soon as a client or an individual or a policyholder is 90 days outside of a certain country, or as soon as they become tax resident in that new country, then their onshore policy back from the UK isn't going to cover them anymore.
Yeah, I think that's a good point. And actually, over the last 10 or 15 years, I've had many discussion with clients who found that hard to believe that, let's say, the policy they took out with Sun Life or whoever it was in, the UK or wherever it might have been, once they went abroad to even places like Dubai or Singapore, where the life expectancy is
Yeah,
potentially longer, they weren't covered. And again, I guess that just that just shows that the level of knowledge that there is in the market, with regard to insurance and why it's so important to review these things. But I guess one of the other things that I've also been staggered about, during my time as an IFA is that, we've talked about how difficult sometimes it is to persuade clients to take out insurance policies. But what then amazes me is that once they've actually taken out an insurance policy, how few of them actually then appoint even a beneficiary or use a trust with these policies. And at the end of the day, that can almost negate the benefits of having the policy if you haven't done that.
exactly.
So can we talk perhaps a little bit about the importance of appointing a beneficiary and using a trust, and why
Of course.
clients really need to review their
Yeah.
policies and check whether they've actually they've done this.
Yeah. Look, beneficiaries are incredibly important. And again, there's two major reasons why I would say that appointing beneficiaries is important. Let's face it, James, you've probably written, I don't know how many life insurance applications in your time. To actually write that beneficiaries form, how long does it usually take? A minute, half a minute,
Yeah,
2 minutes
not long.
tops? It's not long,
Yeah,
is
not
it?
long.
It's writing down the names of the people that you want to pass your policy benefits onto if you were to claim against the policy. So it's something that's very, very simple and very, very straightforward. However, if we were to look again, and we're going back to let's say UK nationals, well, HMRC, which is the tax authority in the UK, is one of the most aggressive, or we have one of the most aggressive inheritance tax laws in the world. So an estate on death is taxed anything over £325,000, and that's on your global assets. So let's just say that you don't appoint any beneficiaries to your life insurance policy. Well, on death, your life insurance policy is going to make up part of your estate. So if you've got $1 million life insurance policy or £1 million life insurance policy, then straight away your 675,000 being charged at 40%, which, as you say, completely negates the reason for taking out the cover in the first place. Now, by adding beneficiaries, you are putting together what's known as a bare trust. Now, it's a simple form of a trust. However, it should, and I say should, it should be okay for sidestepping IHT and making sure that that policy falls outside of a client's estate on death. Now, at the company that I represent, we like to take that a little bit further, and we have our own protection trust. So a protection trust is just a slightly higher up than the bare trust. And essentially what we're doing with this is guaranteeing, cast iron guarantee, that this policy is going to fall outside a client's estate on death, which is super, super important. I can't stress that enough. I'd say the second reason, and it's just as important for including beneficiaries on a policy, is on the succession planning side. So again, a client's circumstances might be a little bit more complex than the next client. So you might have one client that's got 2 daughters, a wife, and pretty much 50% is going to the wife, and he would like 25% to go to each daughter. However, you might have a circumstance where somebody's got divorced, maybe once, maybe twice. A guy I drink with on a Saturday has been divorced 4 times. So you can imagine, if he didn't have any beneficiaries on his life insurance policy, imagine what sort of bloodbath that would be to try and get some of that policy benefit to each of the family members. So it's not just for the tax side. The tax side is incredibly important, but adding beneficiaries will guarantee that your needs or what you want out of the policy is passed to each individual person that you want to pass some of that policy onto. I think every international life insurance company worth their salt, James, will have some sort of trust facility set up. Obviously, for more high net worth people, they might have a more sophisticated trust. And trust me, the protection trust isn't sophisticated whatsoever. However, it does its job. It's very good at doing what we want it to do. But you will find that, you know, certain clients that might have net worth over 10, 15, 20 million, they will want to probably house a lot of their assets inside a trust in the first place. So your life insurance policy, you would be the life assured. However, the owner of the policy would be the trust. And the trust can actually pay the fees of the premiums and can be the ultimate beneficiary. So I would say most or all international life insurances are trust friendly, and we're no different. But when it comes to beneficiaries, I can't stress the importance enough, because I've seen it. I've seen two families squabble over a individual who actually had a group policy and didn't name his beneficiaries. So I can't stress that enough, James.
Okay. Well, thanks a lot again for that, Mike. And I think it's also important for us to stress as well is that your policies and most policies, you know, they are designed for everyone out there in the international marketplace. So they're not just focused on Brits or Europeans or whatever. You know, I deal, obviously, as you do, a lot with Asian clients out here in Asia.
Of course,
Plus,
yeah.
also, they're also, I find, a very valuable tool when you get clients from different backgrounds. So, you know, you might get, you know, an Australian married to a Malaysian or a Filipina, and there's often extra complexity there around, you know, estate planning, because, you know, you're talking about different jurisdictions and they may work in a different country. But I think the key thing is that your trust, it doesn't matter whatever your background or even almost whatever your religion, exactly. You know, once you put that policy in trust, you know, the benefits will be paid out in accordance with the wishes of the person who set the policy up. So I think for our audience listening in today, you know, if you already have an insurance policy, it's really important perhaps that you just check that, you know, you have got, you know, your beneficiaries sorted out and all filled up, and if necessary, you know, you potentially put it into a trust. So I think there was some very valid points there, Mike. So thanks for that. In terms of you know, moving on a little bit from just the life insurance as well, can you tell us some of the additional benefits that you can also offer under your policies as well?
Of course. Yeah, so again, let's go back to the same scenario, James. You've sat down with a client, you've established a term for the client, you've established a sum assured. You can then add additional benefits onto a policy. So you can add critical illness and you can add disability cover. Now, I'm going to go into another case study because I think it's the best way to explain how these benefits can affect individuals. So it was a case with a client was 42 years old. He took out $1 million life insurance policy and he had $300,000 critical illness. 3 years into the policy, he was diagnosed with a very aggressive form of liver cancer. Now, he had medical cover, but he also had the critical illness cover. Now, I'm not saying that critical illness is missold, because missold means that it perhaps is being sold when it's not required. However, I think that the benefits are missold and how it can actually help an individual. So what critical illness is going to give or gave this individual in this particular circumstance was choice. Now, choice, when you're given a diagnosis like that, is something that I think it might have been worth 300,000, but it probably saved his life. Because what choice he got was to review who the best doctor is for liver cancer in the world. And the critical illness benefit enabled him to be his client. Now, he had medical cover, but the medical cover wasn't going to suggest that he was going to say, right, okay, I can go and use the best person in the world at dealing with this particular issue. So it cost an additional 150,000 of his critical illness, which, you know, saved his life. But what critical illness should also be used for, and we shouldn't just say, well, it's used to pay X, Y, and Z, it's used to pay hospital bills, it's used to pay this. This client was unworking, he couldn't work for 12 months. So instead of sitting there worrying about, is my mortgage going to be paid? Are my kids going to be able to still go to the private schools? Can I afford the shopping bills? Am I going to have to sell my house? He sat there and basically got himself better because he had $150,000 that allowed him not to have those concerns. And it's the same with disability cover. If a client is in a circumstance where they're unable to work, it's options, it's choice. And for a circumstance or a position, as I've just mentioned, I don't think that you can put a price on having choice.
No, I think you're right there. So, I mean, really, as you say, these are living benefits that are available with the, the term life insurance policy. So often some people find life insurance perhaps not so attractive because they know it's only going to pay out on their death. But as you say, these are living benefits which will pay out, during your lifetime, and they give you choice that, if you have a serious illness, that you can then take time out of work and maybe sort of refocus your life so that once you recover, you've got that option of, continuing to lead a healthy life. So I think, as you say, these benefits are definitely worth thinking about for, our audience out there if they don't already have them. So thanks for that. And talking also about other aspects of life insurance that you and I have touched on in the past as well. So can you tell us how Atlas Life can help people who are maybe running a small business with regard to insurance and protecting shareholders and the interests of the business, and how they can perhaps use it as well, if they have sort of key employees who are working for them?
Yeah. Okay. So I would say that key man and shareholder protection are the most undersold aspects of life insurance there is on the planet. I can't really put my finger on why. The only thing that I can suggest is that a majority of individuals that are speaking to, the IFA network, you're generally looking to work with individuals on financial planning. So it's very rare that you'd perhaps even go and speak to a business owner. However, I think that the IFA market in particular think that this is a complicated way or a complicated product. And it isn't. It's very, very straightforward. But I think that if somebody doesn't know too much about a certain thing, it's very unlikely that they're going to go in and try and have a conversation about it. So I think that, a majority of people do sidestep this element of life insurance because they don't know too much about it. So if we were to first focus on shareholder protection, so let's just say we've got shareholder A and shareholder B. We have a valuation of the company of £10 million. Shareholder A owns 50%, shareholder B owns 50%. Now, what we do with shareholder protection is we take out, or in this scenario, 50% of the business is owned by shareholder A, so we take out 5 million on his life, and we take out 5 million on shareholder B's life. Now, we also put what's known as a cross-option agreement in place, which essentially is a form of derivative. But for people that might be unsure what a derivative is, it just means the following: shareholder A has the right to sell his shares, and shareholder B has the right to sell his shares upon death. And also shareholder A has the right to buy shares upon shareholder B's death, and vice versa. So let's just say, unfortunately, shareholder A were to pass in a motorbike accident. Under the cross-option agreement, that means that shareholder A's family, the deceased family, has the right to sell those shares at 5 million. More importantly, the life insurance policy gives shareholder B the liquidity to purchase shareholder A's shares. So if the liquidity wasn't there, James, then there could be a situation where shareholder B can't afford to purchase the shares of shareholder A. In that circumstance, so many different things could happen. However, if we say, what if shareholder A, as a member of family, wants to take an active role in that business? But what if they're not qualified to do that? What impact is that going to have on your business? What about if you had to sell a proportion of the company to a competitor? Your life's work gone down the pan because you can't afford to buy the shareholding of your partner. And what happened if you had to maybe take a loan, a bridging loan, or sell an asset, fire sell an asset to enable you to buy the shares of company shareholder A? So it's not too complex. It's an easy way of once you understand it, it's not too easy to concept to grasp. Same scenario, same business. You've got shareholder A, shareholder B, and we'll talk about key man cover. So turnover of this company, as we saw, the valuation of the company is 10 million. Let's just say that, like most companies, 80% of that of the revenue of the company is brought or is completed by 20% of the staff, and let's just say it's 2 people. So, and again, let's just say a turnover of 10 million, just for easy figures. So if anything were to happen to those 2 individuals, then potentially that company could be losing $8 million on its annual revenue. Now, what you can do as a company to insure yourself against is you can take out what's known as key man or key person cover these days, and you're taking out an insurance policy against what that individual's bringing to the table. So in this case, you would take out 2 policies for $4 million each. The individual is the life assured, the company is the policy owner, the company is the ultimate beneficiary. So in the case of one of your two top guys were to not be there anymore, then you're not going to lose 40% of your revenue. What companies also, or what business owners might not see further down the track, is the cost of actually replacing that person, James. So, recruitment fees, are you going to give them a shareholding of the business? Advertising costs, it all adds up, and especially when you've just lost a massive portion of your revenue. So again, I'll come back to the point about term life insurance. It's not sexy when you think, oh yeah, there's so many other more exciting, interesting products on the marketplace. But those exciting, interesting products, I don't think do the same job when it comes to important parts of financial planning, like shareholder and like key man cover.
No, I mean, I 100% agree with you there, Michael. And that's why, as you say, it's so important for clients and international people who move and work abroad to review these things. And I think a lot of that information isn't out there for these people, and it's not easy for them to understand it. So I think those are, again, very valid points. But coming perhaps more specifically
also, James, one final point on that would be, you might have a situation where you've got, in Vietnam here, a expat working with a local partner. Now, I'm not suggesting by any stretch of the imagination that the local partner's going to screw you over. It could happen with any nationality, but it's peace of mind to your family and to yourself that in the worst case scenario, you're not there to run your business, that your family is going to get its real share of market value of the hard work that you've put in.
Yeah, no, I think that's a good point. And in terms of Atlas Life, as you say, you've been working with them now for 7 years or more. How do these policies work? So, sometimes clients will be worried about, the security of companies, because obviously we live in a volatile world now, and sometimes we hear about large banks going bankrupt, even in the States. So what kind of security do Atlas Life provide clients who take out policies with them?
Okay, yeah, no, very valid point. I think, as you know, James, Atlas are more of a, let's say, speciality risk provider. So we get brought into a conversation with the likes of James and his company and other IFA and broker partners that we work with around the region when the onshore market isn't able to offer a valid proposition. So I would suggest that 100%, probably you can't get more than 100%, I know, but probably 100% of clients that you've written with us, James, when you've put the Atlas logo in front, I'd say 100% don't know who we are. Would that be a valid?
Yep. No, I think that's a fair point. Yeah.
So what we've got to do then as a company is to make sure that your client is comfortable as a client of ours. And what we do that's quite unique in the market is we don't actually accept any policyholder risk on our balance sheet. We place 100% of that client's risk with third-party entities, reinsurance companies. Swiss Re, huge entity, You know, they've got revenues of over 14 billion in this particular niche market, the reinsurance world. And I think they're number 2 or number 3 largest reinsurer in the world on size. So they're a great, great company to align ourselves with. The other entity that we work alongside is a company called RGA, or the Reinsurance Group of America. They're a Fortune 500 company, again, AA minus in terms of their Standard & Poor ratings, and they only reinsure life and health. So their speciality, just like us. Some people will have heard of Swiss Re, most of them won't have heard of RGA. So a little bit like ourselves in the fact that they're a speciality provider. Now, RGA have got 3.4 trillion US dollars of life reinsurance in force. So I think that should give any individual the comfort to work with Atlas going forward, because in the event of, you know, you passing, we are working with 2 of the largest and most respected reinsurance companies in the world with incredibly deep pockets, who are essentially going to make sure that there is the provisions there to make sure that a payment is made. Now, I think what's also quite unique about Atlas is the way that we price policies. So we price people on residential status rather than nationality. So we can actually take on any nationality regardless. However, we know that international employees have a very, very changeable life. So we know that an assignment might be 3 years and then they're moving on to the next destination, then the next destination, then maybe home. A majority of the people that we work with, I would say, are expatriates that at some point are going to relocate back to the US, the UK, Australia, France, wherever in Europe. What we have as an ability to, which is quite unique, is that when a client moves to a new location, then of course that client's personal risk profile has changed. So we can make sure that premiums are still being received in their new country or new location. Payments would still be made, any claims would still be settled, but they would actually be on local rates. So, you know, I'm living in Vietnam. A Vietnamese, an Australian national based in Vietnam moves back to Australia. Well, Australia is actually, their personal risk profile would have dropped, and essentially their premium would fall in line with their new risk status. Does that make sense?
Yeah, I think it does actually, and it's useful because it addresses one of the issues that we discussed at the beginning of this podcast, you know, about people moving from, let's say, the UK and Europe and other destinations who have protection policies, but then because of the laws in those countries, those policies don't cover them. So again, I think for our audience who are international employees or, you know, people working abroad, I mean, really what you're saying is that with Atlas Life, you know, if they take out a 15 or a 20-year policy, it doesn't matter if they start their life in Vietnam or the policy in Vietnam, move to Dubai or Singapore,
Right,
and then go to Shanghai and then eventually go home to, you know, Australia or the UK, you will be able to cover them all that time. And
correct.
I think one of the issues also that you highlighted, you know, on the podcast is sometimes, and this actually can be, I find sometimes I'll go see people and they'll say, well, you know, I've got a position in Singapore and I'm going to be with this company for, you know, 2 years, and they're going to give me, you know, 3 times my salary in terms of insurance. So I don't need insurance now. But then I say to them, look, you know, you're definitely going to leave in 2 years. And as you've highlighted, how do you know that you're going to be insurable in 2 years' time? And you know, the policy that you've got with your company definitely will end when you leave. So if you've got young kids, is it not better to take the insurance out now and be doubly covered rather than run the risk of then when you leave your job not having that cover? And, you know, as we discussed earlier, you know, there aren't that many companies out there now around the world who give employees insurance. You know, the number is falling all the time, especially in the expat market. So, you know, I think, you know, that is definitely for one of the key reasons why we use you guys, because we have the certainty of knowing that, you know, whether we sell to our clients in the Philippines and then they move somewhere else, that policy can continue with them. And you know, we've already obviously discussed the importance of you know, life insurance, and we do see it as a long-term plan. So that
Yeah.
ability for the client to be able to take that policy with them wherever they are in the world, I think is really important.
Yeah, and just to touch again on group schemes are a fantastic benefit. But as you say, you know, a majority of group schemes would be 2 or 3 times salary. Is that enough? Probably not. Not if a client, you know, an individual's, you know, maybe at the start of the career, maybe have a young family, big mortgage, 2, 3 times salary. You know, it's a start, but it's a little bit like throwing a deck chair off the Titanic. It's not going to really make an impact over the long run. So what I would always recommend to individuals is if you've got a corporate scheme, go back and ask every single member of that corporate scheme, where do you see yourself in 5 years' time? And if they say, I think I see myself in, you know, a management position, okay, would that be with this company or a different one? Probably a different one. Great. Okay, well, you need to take out some personal life insurance as well, because as soon as you move company, your new company might not, well, you'll be out of the umbrella of your current corporate scheme. So you might then be sat in the rain and not have a corporate scheme to be part of. And as we said, and you know, right at the start, James, it's never going to be cheaper than today to purchase a life insurance policy. It's only going to get more expensive. So, you know, I would always recommend that corporate schemes are fantastic, but make sure that you've got adequate protection as well privately, because, you know, you should have it. Let's face it.
Yeah, I think you know, as you said, that point you mentioned, that it's never going to get any cheaper. So great time to review it today. And you know, obviously, as we enter a new year now, a lot of people are looking at their, you know, investments and reviewing them, but probably even more important to review their insurance needs as well, and whether,
So,
if they haven't got anything, you know, to make sure they put something in place, and even if they have something, to see whether they need to potentially make any changes if they've taken on any debts or bought a house or something like that. So look, Michael, I'd really like to thank you for your
no
time
problem.
today. I think it's been a really interesting podcast, and I hope our audience really appreciate it, as it were. Is there anything that you want to sort of finish up on? Is there any other points that you'd like to add before we sort of finish up, as it were?
I don't think so. I think we covered most things. I think, you know, I was going to say what you just suggested there, that, you know, it's important that you take life insurance out, but it's important to also continue to review it. You know, if you do decide to extend your family, if you do decide to change jobs, if you do decide to purchase that nice second house on the beach and riddle yourself with a little bit more debt, then you just need to make sure that your life insurance is going to cover all those different scenarios. It's also worthwhile to make sure that your beneficiaries are up to date. The majority of companies like ourselves can't accept children as beneficiaries, but as soon as they reach, say, the year 8, as soon as they're 18, you can actually provide them, put them down as beneficiaries. So ongoing review, like you would your investments. However, you know, I think that life insurance, as we said at the beginning, it should form the cornerstone of any solid financial planning going forward.
Perfect. Well, look, again, Michael, thank you very much for
No
your
problem.
time. And also thank you very much to our audience for listening in. I hope you found that useful. And please feel free to reach out to us. So until next time, once again, thanks for tuning in. Bye for now.